Yeah, so let's get right into this. It's a lot going on right now. The stock market was in shambles today. The Dow Jones was down almost 800 points. So I want to get both of you guys' perspective on what today's pullback in the market means.
Trap called a 2% drop, so I want you to start there because you borrowed the crystal ball. Fire off.
For sure, man. I appreciate that, man. So this morning, I go live in the mornings, man, because I felt like a great way to just talk to the culture in the morning was live in action, right? You don't get that much. So this morning, the great thing about the market is, man, it never does something that we've never seen before, right? Mm-hmm. Like it won't do anything that we haven't seen before. So the objective is to just pay attention to it, right? Just like we know the sun gonna come up, we know it's gonna set, we know the market's gonna do the same thing. So 3 things we must analyze is, what are the current market conditions, right? We understand that. We understand who the players are, right? And then you understand what can be affected by these conditions. So we wake up, we know that the last week, first it was just inflation, right? Interest rates. So one of the things we learned that is when bonds become cheaper than stocks, that is a clear coat sign that something is about to shake. So what do I mean by when bonds become cheaper than stocks, right? So bonds are normally a safe haven. Bonds are normally the place where investors run to when things get a little shaky. Mm-hmm. But because interest rates are so low right now, right? And then bonds now are high, bonds are now higher than stocks. Let me say that again. When interest rates become low and you can't get a good return on your bond, on your safe haven, bonds now become identical. I mean, typically they say, okay, now bonds are higher than stocks. So now investors have nowhere to put their money, right? Right now we have $4.6 trillion sitting on the sideline with nowhere to go, right? We got $4.6 trillion sitting on the sideline. They can't go to bonds because interest rates are so low, they can't get a good return on it. The market is so choppy right now, they don't know where to go. So we had what's called a rollover correction. Right? A rollover correction. What is a rollover correction, Trap? So what happens is this. We understand that mega cap stocks and big name stocks have been holding the market up, right? It's something that looks good on the top. So the TV can boast that, yo, Facebook is doing this, Amazon is doing this, Netflix is doing this. But underneath that, you have businesses that are 10% off the high, mm-hmm. right? You have businesses that are 10, 12% off the high. So the correction isn't at the top, it's at the bottom. So now you start to feel it when the ones at the top start pulling their skirts up, right? So when they start pulling their skirts up, now the market starts to react. Why is the market reacting like this? One, interest rates are high, boom. Then you have this new thing that pops up that say, yo, we got this COVID Delta strand that's out right now.
Yep.
Mm-hmm. Right. Yeah. So now you've added something on top of something that was already big, right? So we already understand, again, interest rates will always play a big part in what this market does. That 10-year note is something everyone who's investing should pay attention to. If you don't pay attention to nothing else, once that 10-year note, once that 10-year note starts to go down, we understand that interest rates, mortgage rates, everything else go down. That causes the market to somehow panic, right? So those were something that was happening. So me just identify what's going on. I'm like, yo, because I already understood that fair businesses were 10% off the high. Once good businesses start coming down, we understand now we can have a pullback, something we haven't had. Sell-off, something we haven't had since probably about October of last year. Ian, you can correct me if I'm wrong.
Yeah, you're right.
We overdue for those type of things. So I'm like, yo, because I know now we're going to be in a heavy sell-off, and this was another thing that triggered it for me. A company today like AutoNation, something I tell my trappers about all the time. You understand when things start to happening, what are something that people want to like stray away from? Like, so nobody wants to really buy a car in economic times that are unstable. So they'll go to places where they can get discount parts all the time. If you don't know how to get your gym, it's an alley-oop, you do what you want to do with it, right? So a company like AutoNation, who had great earnings, still declined. Why? Because in times like this, earnings don't matter because people just trying to run for cover. So I said, yo, we're probably going to see about 2% today because something is overdue. We got about 2.6% today. So that's my analogy on it. Price multiples are real high. When I say that, PE ratios compared to stock prices. So when you say that, it's what are you paying for $1 of a company's earnings or a company's profit? That is high compared to the actual stock price. So all these things line up, you now have this writings on the wall for a pullback or for a sell-off. Let me correct it too. You're in a situation for a sell-off, and then that sell-off can get pretty deep, which now causes an overall market correction, which now puts us in a situation where we have buying opportunity. So that was my quick ramble. I hope anybody caught that.
Yeah, real quick, because when we talk correction, we usually thinking between 6 and 20%. Obviously, today we were at 2.6 at the high. I think we closed maybe at 2%, like you called, which is ridiculous. I got my text messages late. So, yeah. So do you think, or do you foresee a continuous sell-off, or have we reached the floor a little bit, and this pullback? Because I see the futures already for tomorrow are up. So what's your take before Ian gives his?
So we got to understand, what are the two? Sell-offs and pullbacks. They represent the same thing, but they are different things, right? So one represents panic selling. The other one represents people just taking profit, right? We must understand when one is happening and when the other is happening, and then we understand how we can react. One of the things, I'm gonna be real with you, that I don't never try to predict. I just go off what the market is doing. So I'll wake up and I actually saw that the futures may have a little bounce back. But one of the things I will say is this: don't let a bounce back make you think the market has recovered. We've seen it numerous amount of times. What that means is today's sellers got in. We see futures picking up. That means buyers have entered the market. Mm-hmm. What we'll understand the difference is who's going to, it's like a tug of war, right? It's like a tug of war. Will the buyers outdo the sellers, or will the sellers panic more and the buyers become obsolete, right? And so in these type of unstable markets, right? And I want people to understand this, because I see a lot of people say, oh, it's deals everywhere. It's deals everywhere. I personally, Ian may say something else because he's a genius in his own right, for sure. We all have the thing we're strong at. I typically don't believe that because the market is down 2%, that there's deals to be made just because it's 2%.
Facts.
Right?
Yeah.
The only way you understand a deal is if you can understand the value of the business. Once you can understand the value of a business, then you can find a deal. So if you can find something that's about 8% on discount, I think it's a good place to get it. If it's at 5%, I think it's a place for you to, stick your feet in the water. But it's only 1-2%. I mean, it's nothing to panic about. You shouldn't sell off. You shouldn't get out of the position. One of my golden rules is sell the eggs, not the goose, man. Right? Sell the eggs, not the goose. If you don't know what that means, let me just give you a little bit more before Ian chop in. The stock market for me is, I like to look at companies like in the streets, right? So there's a difference between having a plug and a connect.
My graduates from my school being Forbes, bag drop.
Bag drop.
A mic drop, bag drop.
Bag drop.